Yeah, what up YouTube? It's Louis here. Today we'll be looking at Bitcoin. So guys, if we zoom out for a minute and look at what Bitcoin has been doing. So since the start of the year, we've basically been ranging between 30 and 60k, 65k. So it's been a 10-month range basically. It hasn't really been moving. So it's silly to think we're in a bear market at the moment, because we've literally just been going sideways. So we've just been in consolidation because the market moves in three directions, which is uptrend, downtrend, or sideways consolidation. So we were stuck below here in May, June, July, and then we managed to break out in August. And now we went up for a few months and have come back down to test that as resistance. And in the last few days, we managed to lose the swing high. Now, what that means usually is technically, if you lose the swing high, so when you make a new swing high over here, you usually come back to test the previous one as support before continuing up, making a new one, and then coming back down to this one, like that. However, if you lose the swing high, so this level, then you go to the swing low down here, and that's why I've drawn out this white box over here. This level, the swing low exactly is 38,200, but we could come to the wick of it, which would be at 3,700. So 37,000 or 38,000, that's the level that we should be looking out for. So we're also creating this pattern here where we have an uptrend and then you have this downtrend here, and you're coming into an apex. And so a move is forced, and usually because you're in an uptrend and this is a short-term downtrend, you should break to the upside. However, we do have this neckline of the head and shoulders pattern back from March, April and May, and that neckline has extended into the future, and you can see this line is accurate because we're getting touches here, 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 and again here, one tap right there. So we're getting loads of taps of support and resistance, so it's a valid area basically. And we're also creating head and shoulders here. It's like a repeat of this. So are we in for this now basically? That's the question. So if so, there's two things that can happen basically. So we can come up here and then break out and then see you later, head to the highs, or we can come down further, break this, and then bottom out, maybe have a wick down and get back above and eventually go back up. It won't be as quick as that, but we will eventually get back up there. So that's another thing. So because we're in this broadening falling wedge basically, so what happens when you're in this sort of thing is the price, instead of getting constricted, because your usual falling wedge is like this, where price is getting constricted, but this is a broadening one where the price movements are getting bigger and bigger until a move is forced basically. So because we have this uptrend here, maybe we wick down to here or wick down to here and then get back above this trend line and head off to 100k basically, because after this wave we're going to 100k, in and around 100k, 100, 115, around there basically. I have two head and shoulders here, one with this neckline and the horizontal one. So this would be the left shoulder, the head, and the right shoulder. But we also have this one as well, shoulder, head, shoulder. And they've both got technical targets. So this one would be down to, actually this neckline's a bit off. Made a fake out. So your technical target when you lost it was there at 36.8k, and then your technical target for this head and shoulder here is exactly the same place, 36.8 basically, in around there basically. So, and that's tying up because at the moment, because we can't make a judgment, we need to see how the daily candle closes, because when we came below it, we wicked down to this line that we mentioned before and came back above, held it as support. The next candle bullish engulfing. So is this the higher low before continuation to the upside? That's what we need to ask. So we need to see how this closes after the daily candle close, because if it closes above the swing high, maybe we could get a bounce back up into this area, hold it as support, and break above this falling wedge basically. Because although it's a head and shoulders, you're back above the neckline, and this pattern is only comes into play when you've broken the bottom, the neckline, and you did, but you've broken back in, but you've broken back out, so the target's in play. However, if we have a daily closure back above the previous swing high, then there's potential we break back into this pattern, and then because this is also a falling wedge, then you'd break to the upside and your target would be the top of the falling wedge, so up here at 52.7k. And if we're breaking that, then we're off to the all-time highs basically. It's all about breaking this high and holding key levels of support. And at the moment, if we can hold this level of support, we're still in this broadening falling wedge, which has a technical target at the top of the wedge, which is your close to your all-time high basically at 61.4k. So yeah, we're in bullish patterns to the outside, but we are falling now, and that's obviously because of the China FUD as usual, which is so annoying. I'll get that up for you now. How many times have we heard this, guys? How many times have we heard this? China bans crypto. Oh my lord. 100th time, honestly, 100th time. It's just a joke. And what's hilarious, I'm going to show you on the charts after. It's happened in the exact same location as last time. So when we dropped from, I think, from 65 to 40, that was Elon Musk's environmental nonsense about the carbon emissions of Bitcoin mining and whatnot, how it's not eco-friendly. And then when we got to support at 42k, we lost there and went to 30, well, bottom 28k. And that was because China banned crypto. And as I said earlier, it's mirroring what happened back then. And on the small version of where we are right now, on the small version of the fractal, I'll show you in a bit, but it's literally happened in the exact same location. It's a joke. So here, Bloomberg says, breaking news, China's central banks say all cryptocurrency related transactions are illegal. And I said, this is getting boring now. It's too easy. It's just hilarious, guys. So anyway, let's get back into the charts. So let me show you. So over here, I think we had a rising wedge, something like that. Let me draw that a bit better. We had a rising wedge here, and your technical target's down here, in and around here. And so you came to your technical target. And then what happened in and around here? You fell, and that was because of the China FUD, basically. You lost your swing high. And where did you find support? Your swing low. Where has the China FUD just happened today? Where are we right now? Literally, look at the swing low of the rising wedge. Look. Rising wedge, or bullish channel anyway, your breakout target's at the bottom. We dumped down, fair enough, but when we came back up above it, where did the FUD happen? Exactly in the same location. Right here. Support turn into resistance, and you drop. Oh gosh. The same news in the same location. It's hilarious, guys. They've banned crypto illegally. They're trying to force us central bank digital currency on the entire country, basically. So yeah, that was just a bit of fun. We'll just dive into the 4 hour. So at the moment, we've got a current candle, so we can't make a judgment off that. But at the moment, you've got a lower low, lower than this, but you have got still higher low over the main structure. Because we want to look at the bigger picture. And at the moment, this is your low, and we've come to that low and bounced from it. So now we need to see what's going to happen with the current candle. So we need to see how it closes in 2.5 hours. Let's say this is the bottom right now, this level here. Because at the moment we do have a higher low, and it's all about this current candle. If we can print a candle like this red one over here with wicks going down like this one, then we should continue up. And if you do continue up, you're starting to form this double bottom where you've come down twice and you failed to break this level, and you've got a neckline here. So you've got a technical target for that. And that's in and around here. So your technical target, if this forms, because at the moment we're still down here, nothing's confirmed yet, but if you manage to hold this, or even wick down to here, which could potentially be our bottom, as mentioned before, because this is our previous swing low, in and around, that could be our bottom, and then we could wick back above here and then start going up, and then that's when you form this. But you only go up to here once you've broken this neckline, basically. Take a look at the 1 hour. Now I've put my EMAs on and it's not looking good, guys, in the short term. But one thing I can say is we're going to get a relief rally soon, because we're so extended from the EMAs. Look, we've got so much space. Look what happened when you pulled away from them over here. You got, it's like a magnet, basically. You always come back to it. Oh, look at this massive dump. You came back to it. Then you carried on down. So it's all about coming back to it. Once we come back to it, are we going to get above it? Are we going to get rejected from it? If we get rejected, then could we make a double bottom like this? Could we come, like, go up, come back down, hold this again? Or are we going to break lower and go to our targets, which are the swing low down here, anywhere between 37 and 38k? And if we do lose, because we have those head and shoulders patterns, their technical targets are in and around 36, around here, 36.8. So it's just about seeing what happens, basically, because this downtrend here is your this downtrend here is one of your necklines for your head and shoulder, and that target was down there. But we also have this neckline, so we kind of need to get above this, which at the moment we're not, and this as well. And then once you get above that, that's that W pattern, basically. So yeah, it's just a waiting game right now. All I can say is that we're so overdue coming up now. It's a joke. And we have like no patterns. All I can say is that a relief rally is needed, because we've had the bearish cross, which is negative, confirming a downtrend, and we're so extended from the EMAs. So we should come back to it, because look over here, extended, come back, extended, come back. So it's all about coming back and seeing what happens after that. All I can say is you had a swing high here, you made your new one, come back to it, and you lost it. So could we have bottomed because we've come to the swing low of it? I don't know if we can consider this it, but maybe. This is where the bodies are, but there is a wick down here, and at the moment we have bounced from there for the past 3 hours now, where we've had wicks downwards. And look what happened last time when you had wicks downwards in this location, you pumped up. So could this be the W pattern that we've been talking about? Perfect, guys. If you enjoyed that video, give it a thumbs up. Also, follow me at my Twitter at Louis F Crypto, and on my Instagram LouisF_. Perfect, guys. I'll see you in the next one. Peace.